Now, I want to focus on borrowed money because it's the one that does the most damage. The market is currently propped up by $1.53 trillion of borrowed money. That's an absolute obscene amount of money. But why does this cause a crash? Well, think about it like this. The number in your stock portfolio isn't money. It's just a price. It's what somebody would pay you today if you sold your stocks to them. Here's how it works. When you open up a brokerage account, your broker offers to lend you money to buy more stock. Usually at a 2-to-1 ratio. So for every $100 you put in, they lend you an extra $100. So you're holding $200 worth of stock. You can elect not to do this, and I'm sure most of you do not trade with leverage, but this is how leverage works. So this works brilliantly on the way up. The market rises 30%, your $200 becomes $260, and you've made $60 on 100 of your own money, a 60% return. Amazing, you're a genius. But now when you run it backwards, the market drops 30%, your 200 is now worth 140. The $100 you borrowed is still just $100. So your own money is down to $40 because you owe the broker $100. Right? You are down 60% on your own money. But there's another catch, and it's called margin. See, that $100 your broker lends you, it doesn't want to lose that money if the market crashes because it's their money, right? So it makes you keep a little bit of a buffer in your account. That's called a margin requirement. It's usually 35%. So taking that $140 example that we were using, if you have $140 left on your account when it's gone down, 35% of that is $49. But you only have $40 of your own money left in the account. Oopsie, you get a margin call, which means your position is forced sold at market price right now. It's not only you that experiences this though. In a market crash, this happens to millions of traders at once, and that forced selling makes the entire market crash. This is called a margin cascade, and we saw this recently in South Korea with the KOSPI, K-O-S-P-I. The KOSPI is essentially an index of the South Korean market. It's like the South Korean version of the S&P 500. Over the last few weeks, a margin cascade unfolded there, and the KOSPI crashed 43%. Hundreds of thousands of inexperienced retail investors got completely wiped out, and millions lost a lot of money. So margin cascades really just start with a few people, and then it cascades into millions of people selling all at once as they get margin calls. And then you get a 43% crash like we saw with the KOSPI. Quick thing before you go, I've written a free guide called How to Retire Before 2036. It's a full 10-year plan for anyone starting late. Get out of debt, invest properly, retire on time. Free download, link in the description.